Understanding employment insurance in Canada. We will cover purpose, funding, how premiums work, and when EI does not apply. Employment insurance provides temporary financial assistance to unemployed Canadians. It also supports maternity, parental leave, illness, and caregiving, administered by Service Canada. EI helps replace lost income during periods of unemployment. It encourages workforce participation and offers access to training and job search assistance. Regular benefits for job loss, maternity and parental benefits, sickness benefits, caregiving plus fishing, and certain self-employed benefits. You must have paid EI premiums and worked the required insurable hours. And your job loss must be involuntary, like a layoff or certain illnesses. EI is funded by premiums from employees and employers, collected and managed by the Canada Employment Insurance Commission, separate from general revenues. For 2025, the employee rate is 1.66% of insurable earnings. Employers pay 1.4 times the employee rate, 2.324%. Maximum insurable earnings are $63,200. That means a maximum premium of $1,049.12 for employees and $1,268.77 for employers. Step 1. Identify your insurable earnings. Step 2. Multiply by 1.66%. For $50,000, that is $830. Employers contribute 1.4 times the employee amount, $162 in this example. Self-employed individuals may opt in for special EI benefits. You must register, pay premiums, and meet the minimum earnings threshold. Employee, 1.66% up to $63,200, max $1,049.12. Employer, 2.324%, max $1,468.77. EI premiums are deducted from each pay period. They appear on your T4 in Box 18, and employers remit both portions to the CRA. Amounts vary by pay cycle but are always based on cumulative insurable earnings. Some employment types and income sources are not subject to EI premiums. In certain provinces, individuals under 18 or over 70 may be exempt. Some non-insurable employment and certain religious group members with CRA approval are also exempt. Non-cash benefits, like a company car, are not subject to EI. Reimbursements, certain allowances, and retiring allowances or severance pay are EI exempt. In Quebec, employers contribute at a reduced rate because of QPEEP. Use the EI reduced rates table. Employers can verify EI status using CRA-RP account tools. Employees should check their pay stubs and T4 slips. Employers must deduct and remit EI premiums. Keep accurate payroll records and issue T4s and T4 summary annually. Understand your deductions and maintain your record of employment. Apply for EI benefits as soon as you are eligible. EI offers crucial income protection. Premiums are shared by employees and employers. Know the exemptions and reporting responsibilities. Subscribe for more clear Canadian finance guides. Links in the description. Like, share, and drop your questions.